what does this say about the global inflation picture, the supply chain snafus? It's not over, is it?
No, exactly.
We've been bearish on Ford for quite some time now, and it's finally paying off. Brian Johnson of Barclays covered the stock and said that despite the sell-off, we believe investors are still underestimating risks to the sector, and in particular to suppliers, from inflation and production of pressures, as well as the impact of interest rate hikes on portfolio allocations. The cyclical effect has finally kicked in, and Ford stock could be set for a prolonged bearish run. Here's why. What's good, you guys? This is Market Thrive, and today, we're going to talk about the reasons behind Ford's decline and what it means for the company's future. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. The first reason is because of Ford's earnings slowdown. Ford's March sales in the US declined by 25.6%. Sales of the company's trucks have now dropped by 34.4% year over year, and sales of its cars and SUVs have fallen by 67% and 9.4% respectively. However, the company was able to maintain its EV momentum by achieving a 16.9% rise in sector growth over the prior year. The company's fourth quarter earnings were disappointing. Although it did above the $2.08 billion revenue prediction, the profitability came in below expectations and fell short by 26 cents per share. So what has been the root cause of Ford's struggle? All aspects of the world, stocks, businesses, industries, sectors, countries, are cyclical. When borrowing rates are low and the economy is expanding, automotive companies perform well. But when contractionary measures are in the works, they perform poorly. Interest rates have been increased by 25 basis points at the Federal Reserve, and economies in Europe are also contracting. I don't think I need to explain why the aforementioned points point to a slowdown in consumer spending, particularly when it comes to more expensive items like cars, obviously bearing Veblen goods. There is, however, another problem in this situation, and that is the push inflation element. You see, raising interest rates in a strong economy when prices have risen solely due to increased consumer spending is one thing, but pushing inflation is quite another. Pandemic lockdowns led to supply chain bottlenecks, which in turn led to a shortage of commodities, pushing up prices. This is known as push inflation, even though the original supply chain issues were trouble enough. Geopolitical tensions between Russia and Western countries have increased push inflation while exerting pressure on non-core inflation, increasing Ford's input prices and decreasing its consumers' purchasing power. Increased household obligations are the last expenditure issue I'd like to discuss. The US population's discretionary purchasing power is being reduced by falling disposable income and increased household obligations. Although I wasn't able to get current information on Ford's other target markets, based on the macroeconomic reasons described earlier, you'll probably see the similar pattern. In a word, the consumer base of Ford is inevitably going to experience a cyclical slump. Aside from when the economy is booming or peaking, there are peaks, troughs, and bottoms to the economy. And sadly, automobile companies typically don't fare that well during these times. All things considered, I don't think Ford will fare well, and I'll explain why. The S&P 500 is selling at a premium. Small cap stocks are battling with inflation this year, according to the model, not suggesting Ford is a small cap. And the risk-free rate of the market is rising as the 10-year yield gains traction. In light of this, I believe that Ford's stock will underperform in the near future. The last point to take into account is the sharp decline in Ford's Sharpe ratio at the beginning of the year. As a lagging indicator, the Sharpe ratio still gives weight to risk-reward assessments, and as an investor, you typically prefer to see a Sharpe ratio of above 1. And as you thought it couldn't get any worse, guess what? It did. Due to a high risk, Ford has stated that it would recall 163,253 Ford Expedition and 35,229 Lincoln Navigator SUVs from the 2015 to 2017 model years. The front blower motor is thought to be faulty and to be the source of the issue. Ford Motor Company will recall 198,482 Ford Expedition and Lincoln Navigator SUVs from the model years 2015 to 2017. This is due to the risk of an interior fire. The blower motor, which is housed behind the glove box, is thought by the automaker to be defective. Despite the fact that the firm has not been able to identify the source of the motor failure, there have been 25 reports of fires in these vehicles, of which 13 were contained to the vicinity of the blower and 12 resulted in more significant damage, including one case of hand injuries. Every time a fire ignited, there were moving vehicles nearby. The symptoms of the issue have also been listed by some owners as an inoperative fan, burning smell, and/or smoke from the instrument panel vents when the vehicle is on. The Expedition and Navigator SUVs from the 2009 through 2017 model years were equipped with the same type of blower motor, according to a report submitted to the National Highway Traffic Safety Administration, although only the 3 most recent model years are being recalled. The timeline submitted to the NHTSA states that the latter model years, quote, coincide with a reduction in the blower motor manufacturing volumes from the supplier, end quote. However, it isn't clear what, if anything, happened regarding the blower motors. The research also notes that data indicates this present issue doesn't appear to affect automobiles from prior model years. For a different, unconnected issue that led to complaints of under-hood fires, Ford recalled 66,221 of its 2021 Expedition and Navigator SUVs in May. In that situation, Ford urged owners to leave their vehicles unattended outside, away from any structures or other cars, until a dealer could inspect them to replace a faulty battery junction box. Starting on September 12, owners will start getting notifications. Dealers will swap out the front blower motor assembly, but owners can visit the NHTSA Recall's website for updates or to see whether their car is included in the recall. Our gloomy view may be overruled by one factor: the company's expanding EV market. In a recent analysis of Tesla, we discussed how the near-term separation of the EV market from automotive cyclicality was possible. Ford has divided its enterprise into 2 halves. The first, called Ford Blue, will concentrate on the current ICE products, while the latter, called Ford Model E, will only concentrate on EVs. Additionally, Ford owns about 12% of Rivian, an EV business with bright future prospects in the passenger pickup truck market. Even though EV could give the stock a systemic lift, its segment sales only make up 8.64% of Ford's revenue mix, so more work remains before it can have a substantial impact on the economy. In this world, almost all assets are cyclical. Ford has enjoyed a successful run throughout an expansionary economic environment, but it appears that this is coming to an end. With sales slowing and consumer spending declining, the company has a weak risk-return profile and is expensive. Although we adore the business, the stock is currently in disrepair. So how long do you guys think it will last? If you like today's content, you'll sure love our previous video featuring the companies Ford and General Motors, which you can find in the description below. Feel free to jot down your thoughts in the comment section below. If you enjoyed today's video, please leave a like. And if you want to stay updated in our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.